What is going on, traders? Welcome back to the Traveling Trader out here in the city that's so nice they had to name it twice. Yes, New York, New York. But that's not what you came here for. In this video, I'm going to be giving you some stocks that could absolutely fly this week, depending on some of the catalysts that we are going to discuss. There are some major macroeconomic factors going on this week that could affect stocks in general, but there are also some specific catalysts on a few individual stocks that I want to talk about. There's one in particular that looks really juicy, and I will get into that. So these are the super important things that you should know this week along with these stocks to watch. Welcome back to the Traveling Trader, your source for non-BS, regular, concise market updates. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know if you are playing these stocks as well. Without further ado, let's get right into it. All right, so I'll start off with the stock that I want you guys to keep on your radar. Jazz Pharmaceuticals, ticker symbol JAZZ. Now, it goes without saying, please do your own due diligence. Do not try and swing trade based off of a YouTube video of mine or anybody else's for that matter. If you're a fan of this channel, you know that I love earnings overreactions, and Jazz Pharmaceuticals absolutely crushed earnings on both EPS as well as revenue beats. And as we usually see in top-E markets, there was a round of profit taking. The stock is now down almost 22% in a matter of a couple of weeks. But here's the important part. They have an FDA approval date coming up this week. As a matter of fact, August 12th. Now, this drug is intended to treat narcolepsy. The drug's name is X-Wave. I don't know if that's how you pronounce it. That's how I'm going to pronounce it. However, the results look promising already. And as I said, on top of that, Jazz already beat EPS and revenue estimates in their last earnings call. Compared to even some of the best pharmaceuticals company, their gross profit margin is at 92% compared to a sector median of 55%. Their EBIT margin, EBITDA margin, net income margin, their cash from operations all look healthy. If we take a quick snapshot look at tip ranks, they earn strong buy targets from Jefferies, JP Morgan, as well as UBS and Barclays. The average price target is $214. Again, it currently sits at $150 at the 300-day moving average with an oversold RSI that has not happened since February 2020, right before the pandemic crash. Now, obviously, with binary events, you get binary risk factors. So if you decide to trade Jazz Pharmaceuticals on the hopes that it does get FDA approved, just know that there's a chance, obviously, that it might not. However, here's why I like Jazz. Because of some of the fundamentals that we went over before, if you take a look at a weekly or a monthly chart, you'll see that Jazz routinely hits the $190 mark. Going all the way back to 2014, it trades in this parallel channel. I might also take a manageable finite amount of money and put it in some call options that expire August 20th. I will send those alerts. I will send my plays out in the Discord as I always do. If you want access to all of our plays, link is in the description below. I also send out my portfolio on a weekly basis, my full portfolio, so you'll know what I'm holding and the distribution for each of those stocks. So that's the first catalyst. The second one is more of a macroeconomic one. It is the infrastructure bill. This discussion never dies down. Our trusty politicians have been working overtime, putting in weekend hours, and it looks like this weekend we came closer to a passage in the Senate. Obviously, then it will have to go to the House for approval. Now, I've done countless videos on stocks that I believe would benefit from the infrastructure bill. We are looking for high growth plays in emerging sectors like solar and EV infrastructure, as well as undervalued homegrown EV plays like Ford and GM. Yes, I know Tesla is technically an American car company as well, but we have positions in Tesla that we've established a long time ago. I'm talking about undervalued that could see a hyper growth rate in the coming 1 to 2 years. A stock like Ford used to trade in the $18 range, and this was before the EV revolution. It currently sits at the 21 weekly EMA, just under $14. We continue to swing trade Ford because it does respect these trend lines very well. But with the potential for hyper growth in the EV sector, the fact that the government is willing to support American companies, or seemingly so, are we saying that Ford is now 25% less valuable than it was a few years ago when it was trading at $18? No, of course not. So I will link to that video where I talk about the infrastructure stocks here, but I'm basically looking at homegrown EV plays, EV infrastructure plays, solar. I'm looking at undervalued stocks, specifically in manufacturing. So I've talked about Caterpillar. I've talked about the PAVE ETF, PAVE. But go ahead and check that video out here. However, the infrastructure bill looks like it is one step closer to becoming a reality. Also coming this week is the CPI report, where we will get a glimpse into the inflation data and its effect on the economy. I'm really curious to see how those who found jobs will actually affect the consumer price index. This can obviously have an effect on interest rates, which could affect growth stocks, mainly NASDAQ stocks. As a hedge, I do have a put spread on the Qs, which is the ETF that tracks the NASDAQ. Again, I sent that out in the private trading group. On Friday, we're going to be seeing a report on video game sales. Now, I've talked about this before, but there's one stock that I liked buying on the overreaction, and that's Activision Blizzard. Again, just like a lot of stocks that crush earnings, there was an overreaction, not only due to an earnings sell-off, but there are some lawsuits in the work. There was a change of leadership at the top. However, at a 25% discount, I'm happy buying into ATVI for the long term. It is also oversold on the RSI for the first time in 3 years. So hopefully we get some tailwinds from that video game report on Friday. But if not, this is a long-term play anyway. And lastly, take a look at the Bitcoin mining stocks. So Mara and Riot mainly, especially as Bitcoin breaches that 45K level. Mara actually has earnings coming up this week, and it recently closed above the 100-day moving average for the first time since early May. Riot also has earnings coming up this week, forming this double bottom. It looks like it actually has a bit more upside than Mara percentage-wise. And on the Robinhood front, ticker symbol HOOD, H-O-O-D, I bet you we see another round of retail push here, especially as ARK is releasing its webinar this week as well. Earlier last week, I did a video on why Robinhood's stock price would drop. I talked about the insider selling, etc. It dropped all the way from the 80s to almost under 50 bucks, but I do think we will likely see another round of retail buying here on Robinhood, especially following ARK's webinar. However, be very careful, especially if you don't know how to read a chart or you don't know how to swing trade. This chart is definitely not for the faint of heart. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you are trading. If you want access to all of our trades, link is in the description below. You will also get access to my full portfolio. Follow me on Instagram and YouTube stories if you want to see stories from my travels, including NYC. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.